Good morning. It's November 19th. It's 8:21 a.m. Eastern Time. This is Critical Point Podcast. This is the morning brief of the stock market. We're looking at the daily chart this morning of this is a continuous chart, but it's hinged to the March futures already. And what we've seen is a negative reversal yesterday where it was trying to pick its head up. They sold it down. You could argue it was just a down day and not necessarily a negative reversal. We believe that either yesterday or back on November 16th, a level 3 top was put in place that relates to a low in October 29th. You may recall I said something was occurring that day that was rather different for such a serious decline, as if it was trying to pick its head up. They really made an effort to buy it, put it up, but it was also just a knee-jerk reaction and a level 3 top. So this would suggest that instead of having a good chance of topping on November 9th, the opportunity to top was starting November 16th on into next week. So there is a chance this is some kind of an early drop. They're going to bring it all the way back abruptly. If they snap it back to around 3,600 or higher, I think we want to assume, and if they do this in just the next 1 to 3 trading days, I think we have to assume it's just yet another knee-jerk reaction within a topping process that we're not getting that nice, crisp, well-defined, easy-to-call top. But I would still be bearish. Now, if it's going higher late next week, I'd be concerned maybe we did call level 3, but for some reason this larger trend since September, believe it or not, even though I know it doesn't look like an uptrend since September, is extending to beyond what we would normally anticipate, that something else is holding it up. For the moment, I think we've got a very good case here that the market has topped out and it's moving lower into a low next week. They should sell this. Let me double check my work here. Yeah, they should sell this for about 2 to 3 days minimum, with as much as 10 trading days. Okay. They should sell this into a level 3 bottom that would be the first opportunity, but unfortunately only the first opportunity for a level 2 bottom. And I'm thinking it's actually the ideal opportunity for level 2 bottom. I'm thinking if you bought for this level 1 in September for a long-term incremental purchase, then even though I realize you may want to stay with buying only level 1s because they're the most important buy during a year, and a level 1 should be due first quarter of next year, the problem is, will that level 1 be as low as where it's going in the next couple of weeks for this level 2? Or will it be lower, or is it actually going to be higher? And I'm a little concerned it's going to be higher, because I'm telling you, there's some people out there really getting bulled up long term. And even though I think some of their objectives are getting too high and they could be getting carried away, and I fully understand a contrarian would want to start betting against them, the thing is, I think their foundation of their bullish point of view is a correct one. So I'm not convinced we're going to see the negative news going into the first quarter that can do that. Meaning it pulls it at level 2, bounces some, brings it back even lower, and it's a better buy. I think I'd rather just keep making incremental buys. I'd buy the level 2, let it bounce, pull back for level 1, buy it no matter the price, just buy it. If it's lower, just be thankful you were able to buy some lower instead of becoming discouraged that you're now losing on the prior purchase and all that stuff, okay? Because we are in a long-term bull market, all right? I suppose the virus can really blow up on us, but I doubt we're going to get any kind of political blow up, and I doubt we're going to get any kind of a blow up in the economy itself and the financial system. And I think the Federal Reserve is there, and I think Congress is going to do even more after the first of the year. All right, and I don't think Trump matters anymore to the stock market. It may matter for a day, it may matter for a few hours, can be on the list for a decline for a week or two, but I don't think it's going to be the primary driver. All right, everybody knows Trump's going. That's all there is to it. And I don't think we can get a sudden surprise where he won. Okay, so I really think they're watching the virus, they're watching the economy, and yes, the high frequency data is warning the economy is rolling over, having some problems that probably relates to the virus. And then we know that the Now some of the states are pushing harder on mask mandates, social distancing. They're doing shutting down at least evening, nighttime type businesses here, and telling people to hunker down, stay away, hunker down for Thanksgiving, Christmas, and all those things can hurt the economy. But it's not like it was earlier this year. I think it hurts the economy very little because people learn they can still run out, shop, they can still go to work somehow, work remotely, they can still do online shopping. So I think, I just don't think we're going to get that impact. And by the way, on the virus, yes, the weekly low is in and it's already rising. And anytime this week on into the week of December 18th, I think we'll see a top, some kind of dramatic setback perhaps in the number of cases, maybe even a dip in the deaths. Then we just have to watch out what's going to happen by January, February. Will we get a fourth wave and even higher still? And unfortunately, the model is not geared to tell us that. It's going to catch these smaller waves. Just look back on your chart of cases. You'll see 3 waves. We're in the 3rd wave. Measure those amounts of time, look at those durations and type of waves, and just go ahead and imagine one for early next year. But you have to allow it to top lower than the top that's coming in the next few weeks, as well as allow it to top higher. And the reason is of having debate of lower or higher is it would be inside of a much longer trend since March or February, whenever this began, okay? And the problem is we don't have enough data to forecast that. At any rate, I'm spending too much time here on the longer term stuff and intermediate stuff. At any rate, I do think we'll see a level 4 upswing by tomorrow into Sunday, maybe early Monday, and then it'll be back down again. And if the 5-day average is now resistance around 35.8620, then the level 4 will just be like a knee-jerk reaction within a level 3 downtrend into next week. Now, how much downside potential do we have? Well, so far within this trend, it's saying we probably don't have any more than coming down to near 35.15 or so. Okay, it should actually stay a little bit above it, and that may be it. However, a violation of, say, the low on November 12th or November 13th, those lows would generate new signals that could be as low as 33.61, okay, for the March. So take out, alter that a little bit for December and your cash market, okay. So that's the lowest I see coming. And so that could mean a sizable drop in just the next couple of weeks, that something really discourages them and shocks them. I don't think that's going to occur. I think what will happen if it's going that low, it's going to come down this level 3 low next week, but not for a level 2. And it's going to rally for a level 3 high, something like this. And then it's just going to decline into the next level 3 low, which would be the level 2. It would decline lower. My guess is we're not going this low. It's going to go below this low, and it's going to bottom somewheres in this area for level 2. And I think I want to take a chance on buying the level 2 early, take on the risk, because I'm thinking there's a good chance this market can be stable to higher into year end. And I think it's going higher into March, April for the next level 1 trend. It's going higher into January, Feb for the next level 2 trend. And I think the reason is we're going to get through this transition with Trump somehow. People are going to bet that, yes, right after the first year, the Biden team will work on fighting this virus, but they're also going to work on more stimulus. And I think Republicans will try to fight it and cause all kinds of problems. But I think there's something changing inside the Republican side, which I'll talk about another day. There's a whole new organization of young moderates that I may start giving them a thumbs up. I've been anti-Republican for quite some time now, but I may give them a thumbs up. They seem to be more in line of saying, we got to be more inclusive of everyone in this capitalistic society or it's not going to work. They're going as far as saying we should like labor unions, and yet they're Republicans. That's the mentality I want to see, and I think it's coming. Any rate, I got to be bullish next year, and man, some people are just outrageous bullish. Some people are saying by the end of next year, the Dow Jones will be at 40,000. Here it is at 29 something. That's massive, okay? I'm hoping they're right because I am going to be bullish for next year, but I think it's going to be less than that. All right, but I am bullish next year and for the decade. All right, any rate, yes, don't be surprised of an up move if it trades above the overnight high at 3573.75. Consider it's a level 4 upswing. Consider it can top late today, Sunday night, early Monday, and it's just going to be back down into a low on Tuesday. Okay. Now it's possible it goes lower today, however, and does not bottom until tomorrow, and then we get the snap up, and I think that reduces the amount of time for that next level 4 snap up. I think if it wants to stay lower today, that's going to be more, and will encourage me that the level 3 trend is down into next week, and it may be the level 2. And if the level 2 is going to bottom next week, I think there would be more drama and more downside and a tick up in volatility than what we would expect for the level 3 trends. A little more something. And I like how this indicator, even though it didn't make it to overbought, it has a beautiful negative divergence in harmonious action compared to price, which increases the odds for top. But we're not getting the sell signal until today. If it closes lower today, it probably will give us a sell signal, and then they'll both be on the same page. Right at the moment, it's not on the same page, which does still leave the door open, and maybe it really hasn't topped like we think. But the best forecast is this is moving lower. All right, I've spent enough time here. Let me just give you a view of the weekly chart. Now, this would probably be off the December, I think. At any rate, what we have here is a bit of a negative weekly reversal, even though it did not make a new high. And so I think we have a sign of rolling over, and the model saying, yes, next week is earliest for level 2, but it could bottom as late as the week of December 14th. So something could be going wrong to extend this further. Now, our weekly stochastic is actually acting bullish instead of bearish like the daily stochastic. It's a wide enough spread warning us something could go wrong here, and this does recover into a top that may occur as late as the week of November 30th. Then we get our level 2 pullback. So this can still be rather complicated on us. And if suddenly Trump concedes and actually says he's willing to help with transition and wants to help with a stimulus package and everything else, I think they're going to be quite bullish. So it's going to cause problems for this bearish scenario. If he concedes but acts like he's not willing to help out or do anything, I question how bullish this market would be, because it feels as though this market also wants to sell for year-end tax purposes, that if we wipe out all the economic news, all the fundamentals, all the political stuff, it would want to go down normally, not up. All right, I think it's approaching that time of year to do it. Now, we also heard that there's the 4th largest amount of pension rebalance on record, or at least since 2000. And I forget the bank, I think it's Bank America showed this yesterday, the 4th largest. So that means there could be heavy duty selling in the stock market. But someone correctly showed that some of these high levels of rebalancing mounted to nothing. It didn't even have an impact on the market, all right? So it could be all talk. But rebalancing can be important at times. So we want to watch out, because they called that month-end rebalancing. All right, not quarterly or something like that. So I assume the selling's coming now. And so we could have a pension influence, but we could have people who are just using that as an excuse, or they believe it's a fundamental, and they're trading the downside here. So I think we got a little bit of fundamental willing to sell and the technical willing to sell here, regardless of the news and fundamentals. I think this market should come down some. All right, what's going on with the outside markets? As long as I've taken this long, I might as well give an update there. All right, let's take a quick look at the bond market. I haven't even run the models here yet this morning. No change, doesn't seem to be doing anything. Still think it picks its head up a little bit next month, but I still think we've started a long-term bear market in bonds. Dollar. And I'm not picking up any risks that would really make bonds explode here and therefore really sell the stock market. Dollar. Dollar can have a nice pop back up towards 94, maybe a little above it. Doubt 95, or seriously doubt 96 and higher. I think it bumps its head in a few weeks for level 1, goes right back down early next year. And if it won't go any higher, 94, there's a chance next year it violates the recent lows. I have no idea how low, but I am still a long-term bear in the dollar. Let's move to gold. Gold is now misbehaving. I don't like this. I want to see where it closes next week. I want to see next week's low. It may be getting too low here for a bottom in gold. It may be gold is just not really seeing the bullish reasons. It's not willing to get on board of the inflation side and the growing economy side here. Maybe it's thinking a growing economy is less risk, actually, and that's countering inflation. I don't know what it's thinking, but I'm not pleased with this action in gold. I think we got a problem here, and yet it's supposed to bounce into a level 2 top. And then it could come down for level 1. It may, or level 2. I don't know if it would be a level 1. Yes, it would be a level 1 by the looks of it. So it may be that gold just needs to consolidate, rest some more. I'm still a long-term bull in gold. And then as we move to crude oil, I still think I want to give it a chance for a last-minute level 1 top, a decline into early next year, but then I think it turns bullish off of gasoline, moving higher into summer for the seasonal pattern and for a growing economy and more inflation. All right. Now, what could go wrong is the level 1 top occurred as early as the earliest allowed, level 2 occurred as early as allowed, and the trend is actually up into January, Feb, not down. So we want to consider that as well. In fact, I think I would prefer it if you're using oil as an economic indicator. We would want it to see better support. So I'll have to keep an eye on that and keep re-evaluating that. I still think the NASDAQ is due to now start outperforming the S&P 500, but that could delay for up to 3 weeks, and I don't know as the NASDAQ is going to do all that grand in coming months. It's still due for a little bit of a long-term type setback consolidation resting here. I think the emphasis on people want to keep moving towards value from growth. I think that's going to pressure some of the FANG stocks, some of the high flyer momentum stocks, and the NASDAQ. So I don't know how much to really believe in that ratio study that's saying the NASDAQ should pick up some strength in coming weeks here, months, that kind of thing. On balance, I do believe in the value growth investing. I like the Russell 2000. It gave signals on its ratio and spread that it should move higher, meaning it can outperform the S&P 500. But looking in past years, I have not been as good a timer of the Russell 2000 on the S&P 500. And I don't know how bullish it'll really be this decade. I think the emphasis will still remain on big business, but I think small business is going to do better this decade just because of the democratic slant here of trying to help middle class, poor, and Main Street. And now maybe even the Republicans are changing internally here. What else can I show you? I guess I can just go to this intraday chart here that I didn't even update this morning. As you can see, in theory, they may have to sell the market all day today, but they are going to, by tomorrow, be swinging it back up for a level 4 top, and I can go ahead, be something like this here. Okay, we'll adjust that over time, and it is oversold on the intraday indicators. So I think if it trades above 3573.75 on the December futures, we got a chance for a level 4 upswing here. So like I say, by tomorrow, I think the market will swing up. It's just a matter, do we get a positive reversal today, meaning down early today, up late today? Or is it down all day and then we get the bounce up tomorrow? But I'm concerned the level 3 trend is down into next week. I'm concerned the level 2, level 1 trends are down into next week and maybe down into sometime first half December. Manage your risk now. Now the others, I have no other news, nothing really exciting going on in the politics, the economy, and whatnot.